Good evening, everyone, and welcome. The first of the major banks to report profits did so today. Wells Fargo, the nation's biggest mortgage lender, overcame a drop in mortgage revenue to report higher quarterly profits of $5.73 billion. That compares with $5.52 billion a year ago. Mortgage originations were way off, down 58% as refinancing basically dried up. But profits were helped by stronger lending overall, securities trading, and lower loan loss reserves. Still, investors pushed down the stock of the nation's most valuable bank. It closed about 0.5% lower as analysts pointed to rising expenses. Dominic Chu has a closer look now behind the Wells Fargo report and what it may suggest about the banks that post earnings next week.
Wells Fargo reported profits that matched and sales that beat analyst expectations. Many investors pay a lot of attention to the earnings report because it gives a glimpse into the health of the real estate market. Wells Fargo is so big that it makes an estimated 1 out of every 6 home loans in America. It made more loans than the previous quarter, but far less than it did the same time last year when interest rates at historically low levels led to a huge wave of mortgage refinancings. Wells Fargo Chief Financial Officer John Shrewsbury thinks Americans aren't as enthusiastic about buying homes as in the past.
What's holding people back from what we might have thought was going to happen in the purchase market is a combination of available supply. It's just a little bit harder to find a home in certain markets, either because people are priced out or because new home development isn't what it was before the crisis. So I think that's, at the margin, one of the items that we're looking at.
That could be one of the headwinds to the bank's business going forward. And Wells Fargo is keeping a close eye to see if it will have an impact.
The purchase market should, frankly, benefit from the fact that affordability is still really good, right? Home prices are up 8% year over year, but they're still moderate compared to where they were at their peak. And rates, while they've moved up a little bit, are still at generational lows. So if long rates move up materially over time, absolutely, that will have an impact of curtailing mortgage origination.
Wells Fargo provides a look at the traditional Main Street side of the banking business. Next week, all eyes turn towards the Wall Street side with big banks like JP Morgan Chase, Citigroup, and Goldman Sachs that have more exposure to investment banking and trading. For Nightly Business Report, I'm Dominic Chu.